All right. Welcome, everyone. This is the Trader Circle for March of 2024. For those who are seeing this video, you may know this as the monthly mindset Q&A. Just change the name to give it a little more broader meaning in the sense of instead of just coming in here asking me questions and focusing on just like the mindset part of trading, I wanted to expand it more to where we can go over like technicals, strategy, of course, still the mindset, and also really give the participants a floor to, express their experiences and all that good stuff, what works for them, what doesn't work for them, so on and so forth. So, before I continue, one thing to note for whoever does sign up for this in the future, I require that you attend for me to answer your questions because I'd rather have a conversation with somebody as opposed to just, some questions on a screen. And sometimes questions that people ask are a little vague. So I would want, more dialogue to really get to the bottom of what's behind the question, or else I'm just going to give like a general answer, but it may not be pinpointed to exactly what you may need. So with all that being said, we'll start off before we went live, talking to Vincent earlier on essentially, you know, the context for those who are watching, essentially, after, let's say you take a big loss, or even just in general, where you start second guessing your trades, or you may become afraid to take trades. The biggest thing when that it comes to this is really understanding, like, like I was mentioning earlier before we started recording, losses are inevitable. They are part of the journey in trading. Nothing is 100%, especially in trading. If you find somebody that's 100%, please send them my way because I have not discovered that yet. But it's really understanding that, you know, if I have the data that says this specific setup or this specific trade has a pretty good win rate, then my only job is to get in. And really everything other than that is just a mental blockage. And of course, there are techniques in the sense that can help in those moments. Of course, you can do affirmations, but I won't go too deep into that today. A really big one is really practicing breathing practices because they help slow down that emotional process and put you back in a logical state. And I'll probably send you some videos and probably everybody else that attended today, just as a refresher for a practice. So, when you do your breathing practices, you can slow down and really, come back to your logical frame of mind and understand, hey, this is how much I'm willing to lose on this trade. If it goes my favor, this is how much I'm going to win or potentially win, either direction. And really being okay with that. Because once we get into the trade, we it's out of our control, whether it goes up or down, in our favor or not in our favor. As long as we perform properly, that's all you need to do. If probability is on your side based on your data and what you've collected from your journaling, which I hope you journal, and I'll ask you in a few moments if you do or not. Um, but it's really just putting the trade on. And then once you put the trade on, there's different things that you can do. If you're still like in that emotional state where you might want to like get out of the trade really quickly or take profit really quickly, some mechanical things that you can do, like on your charts and stuff like that, is really, well, first set your alerts once you get in or out, or rather once you get in for your take profits and your stop loss. And if you find yourself being emotional looking at the chart, then literally don't watch it and don't look at your P&L. If your broker does allow it, hide your P&L because we're not trading P&L, we're trading the charts. So something you mentioned earlier about, using the tight stop loss, I wouldn't necessarily say just use the stop loss and then just get in the trade because let me actually bring up my chart. Um, let's go. So I wouldn't really say use a tight stop loss because the trade or the setup that you're about to get into may not. require a tight stop loss. Some setups do, some setups don't. Um, let's say an example in the chart. Well, before I go into the example in the chart, is all that making sense?
Yes.
Cool. So let's say, for example, on this 212 down that we have on SPY on the 4-hour chart. Oh, whoops, it's not what I wanted. So we have this 212 down. Now for this specific trade, my entry is going to be as soon as it breaks this low for puts, and then my stop loss is going to be above this candle. My first target is going to be the previous candle, the low right here. Second target is going to be this low here, and so on and so forth until you get stopped out. So these two candles was that single trading day. So as soon as I get in, I just set my alerts and then I go do something else, or I focus on futures since I mainly trade futures. So if I were to trade options, as soon as I get in the trade, I'm setting my alerts and my target and my stop loss, and then I'll go do something else. Because it is not going to benefit me to babysit the trade, especially if I'm getting in on a 4-hour chart where I'm going to expect that at least the trade take 4 hours to play out. Sometimes it'll play out in 30 minutes, sometimes sooner if it's, strong momentum. But I did my job. I got into the trade. Anything outside of that is out of my control. And it's perfectly normal to be fearful when it comes to trading because as humans, we're not designed to excel in how do I put this? In like unknown territory or like things that are not certain or in uncertainty. That's the word I was looking for. And the markets, very uncertain. Of course, with your technical analysis and your screen time and your skill, you can have a higher probability and so on and so forth. Um, but it's perfectly normal to be afraid or to feel scared. Still happens to me sometimes. Again, we're human. The biggest thing, as I'm sure you've heard, feel it, but you got to still get in anyway. Because what you don't want to happen is you see your setup appear and then you get scared, you don't take it, and you see another one, you don't take it, and all of them hit your target. And then the one you decide to get into, finally, it goes against you. And then you're like, oh man, I knew I shouldn't have got into it and I lost money, X, Y, and Z, blah, blah, blah. I've been there. I'm sure a bunch of people have been there. So we take all our trades. If our setup is there, we take it. After that, it's not on us. Anyway, let me know if that made sense.
Yeah, it makes complete, it resonates like 100%. But I became more hesitant in the past 2, 3 weeks after that, incurring that significant loss. I knew I should have taken it, but at the end of the day, I didn't take it. I didn't chase anything, so I'm still, the portfolio is at where it's at. But I do have FOMOs looking back. I should have taken those trades in the past 2 days, kind of thing. So makes sense.
Definitely. And one thing as well, what helped me transition out of that phase when I was going through that is, start slow. Like instead of like, all right, if I used to use 5 contracts, let me keep on using 5 contracts, start with one or even with two. That way, you know, it would be easier for you to, build up those small wins, get the confidence back, and then slowly compound your gains as you progress. Now, sometimes, getting big wins is a little detrimental for a trader in the beginning, in my opinion, because it can give them a false sense of what the market may be. If they haven't established like proper disciplines and things like that. But just take your time with it. If you could do like one contract, or I would do one contract for like a week or two, build up those small little wins, get that confidence back, and then slowly build upon that. Maybe after 2 weeks, if I do well, I go to 2 contracts, and then you slowly build up your position that way when you get into trades. Me personally, I use 10% of my position in every trade, specifically day trading. If I'm swing trading, I'll probably do 8%. If it's really good setup, then I'll, do 10%. excuse me, but that's how I do it. I don't ever really do like, oh, it's a really good setup. Let me do 30% because there's still that probability factor where it may not go in my favor. And even with the compounding thing that people tend to forget is, though that compounding factor, it adds up. Because let's say you take a two or $3,000 account to 10,000 in 3 or 4 months, and instead of using $300 per trade, now you're using $1,000 per trade, and then you'll build up more money even faster. Which, of course, the more money you have, the more money you build, so on and so forth. But again, you know, take your time with it. Don't rush into it too much. The biggest thing is patience. You'll get to where you need to be. It's really just making sure your system is in place to make you succeed. Cool. So, Rob, I think you mentioned, well, segueing into some other questions. Rob, I think you mentioned, I think it was you who mentioned like a good starting point on what to practice and how to practice it correctly, right?
Yep. Yep.
Cool. Now, I guess my question to you would be, um, where are you at now with your trading? Like, are you trying to trade options? Have you been trading options? Are you still mainly trading like regular stock, futures, and
So, um, a lot of the past like year or two, I've been just focusing on the mentality you need in order to trade. I was in the market when the market did that crazy stunt in like 2021, right? Everything went all-time highs and I was up so much, and I learned a lot about myself in that process. A lot about greed, a lot about um trusting myself, my gut. So what I did for the last couple of years, just kind of average down on things that I held. I didn't want to sell for a loss, and perhaps that stopped me from seeing significant gains because that money could have been somewhere else, you know. But I did manage to bring my positions down in average on average cost, and I'm sitting at like a fair point now where things are floating around my average. The market is very volatile, so sometimes you'll wake up and your portfolio is up 10% or down 10% right now when you're holding stock, especially um, the kind of stocks that I was holding. But my segue into it now is that I want to be able to trade options. And I've traded some options in the past, like I know about the calls and then the expiration dates and so forth. But I think that I want to take my money off of those stocks now that are so volatile and get better and learn how to do the options trade.
Gotcha. So, in the sense of options, what I would say is um, start slow, especially with options, because it can go south really fast if you don't know what you're doing.
Yep.
Um, Definitely learn the Greeks, like delta, theta, contract selection, all that good stuff to give you a proper idea of, how things work. That way, it's easier for you as you transition. And with the strat that I was mentioning in our chat, um, to me, the strat is like one of the greatest things I've ever learned. Been using it for 2 years. Pretty much almost exclusively trade options with it. It works super well. Um, if you did see the video, like I was mentioning, what the thing that I love most about the strat is it tells you exactly when to get in, exactly when to get out, exactly where your targets are. So you're not really guessing in the sense of, all right, cool, when do I get in? When do I get out? Stuff like that. So definitely keep on studying that material that I gave you. And as you study the strat alongside options, you can better see how to put them together. And to give you some insight, um, let's say, for example, and hopefully this makes sense when you get to it, but what I like to do if I'm day trading options Usually I use like at the money contracts, which are pretty much just mean contracts that are close to the current price of the stock.
Yeah, like in the money.
Yep, yeah. So some stocks I do in the money, but usually I do like at the money. But one thing that I like to do is you'll probably see up here in my chart where it says like day range and ATR. ATR stands for average true range, and that just gives you an estimation of the approximate value of what the specific stock that you're looking at, what it moves in a day. So if you're going to be day trading, um, I like to use ATR in the sense of to give me an idea of how much the stock will move to choose the appropriate contract. Granted, I usually do at the money, so I don't really care too much. But ATR is still good to know in the sense of, for me personally, I wouldn't go more than 50% of its ATR when choosing a contract. In the sense of, we have the SPY chart up right now, SPY, and the ATR is 4.75. So let's see. So let's say for tomorrow, I would go short if it breaks this low of the candle. And then let's see. I'll probably use the body as a target. Let's do below, and then you can do the wick as the next target. So looking at SPY here, if I were to get in at 511.20, once it breaks that low for puts, and the ATR we have here is about 4.50, I will probably choose a 510 contract or a 511. The reason being, of course, you can go kind of like out the money per se. So let's say if you got a 511 and then let's say one of your targets is 508, you can choose like a 509 contract, even a 508 contract based on its ATR, which is still within that. So if it does straight flush down, it'll hit those targets based on the ATR because that's only about that's what about almost $3 a move down, and it's ATR 4.57. So clearly, it'll more than likely hit those targets that we're looking at. Um, Something to note, I do not trade zero DTEs on indices like SPY, QQQ, IWM, stuff like that. I only trade one or two DTEs. Personally, if you get caught in a pullback on a zero, the pullback and theta is probably going to kill that contract unless it gets like, in the money and stuff like that. And if you're trading without the money contracts, that thing might be toast. So for me, I like using one or two DTEs. If it's Friday, like for regular stock, I'll just pay the extra money and do the next week's contract again, just what I'm comfortable with. And with indices like SPY, such and such, I just do like the Monday contract, so like the 3 DTE. Again, I don't mind paying that extra money, my personal preference. Some people, if zero DTs work for them, hey, keep on doing it. But again, for me, um, I like to not trade zero DTs. But anyway, to encompass all of what I said, start slow with options, keep on studying the strat. And any questions, we're in the chat, so just message me. Um, Once you get a better understanding of the strat, like I mentioned, and you learn um, with options more, stuff like that, and I'll send you something after we're done here, so you can study up on the options. But once you get that, I will probably start there and paper trading options at least until you get like a proper understanding of it. I'm not sure what trading platform you use. Thinkorswim has on demand, which is great. It also has paper trading that you can use. On demand, you can like go back previous days. It's a little finicky um, sometimes, but you can paper trade. You can use on demand to trade like previous days. Webull has a good paper trading platform that I used to mess around with when I still used to use it. Um, Robinhood, I'm not sure if they do. I don't use it, so I can't really tell you if it does or not. But those two tend to work great for me, or at least Webull when I used to use it. But yeah, like I mentioned, just start slow with the options, the Greeks, all that good stuff. and learning the strat and just start from there. And let me
Will
know if you
do.
have any questions since I went off on like a 10-minute tangent.
Hmm. No, I respect it. I think that that's a lot of things that I definitely want to practice on. So I appreciate that. I I'm actually pulling out from a couple of my stock positions and just kind of want to have that buying power for whenever I do feel comfortable to jump into those options.
Definitely. An option that I like if you're gonna, well, if I'll be starting off with like with a smaller account, I like IWM. IWM isn't as expensive as like SPY or QQQ. Give or take, depends on the IV if that's high or not. But usually you can get like a 1 or 2 DTE for like half the price of a SPY, 1 or 2 DTE. But again, it depends on the IV that it's showing. I think like 2, 3 weeks ago, IWM's IB was pretty high compared to the other. So the contracts were like almost evenly priced. But usually they're a little on the cheaper side. IWM doesn't, in my experience, doesn't pull back as crazy as QQQ or SPY does. So I would like, that would be a good practice point, in my opinion. The contracts are liquid, so you can get in or out pretty easily. All right. More questions, or we can keep on going on this. All right, we'll continue with the strat. You watched the strat video, right? Vincent and Rob, or just like well, Vincent, you know about the strat, right?
Yeah, I did watch the video and I do have the PDF pulled up.
Cool.
I am
Same.
referencing back and forth. Yes.
Did you have any questions on it so we can go over it? Either one of you or, in general?
I mean, I guess if you want to start from the beginning, I don't know where everybody's level is, nor do I want to take this call down to a very novice level, but it'd be nice to kind of start from the bottom. But that's where I'm at. So you decide.
Novice, professional, experienced, it's all good. We're all here to learn. And maybe somebody who's a novice might see this and they can benefit from it. So it doesn't matter. But yeah, essentially, just like I mentioned in that video, with the strat, it's just based on price action. Also, if you have your chart up and it doesn't look like mine on the 4 hour, when we're trading the strat, we only use regular market hours. We do not use extended hours. I think the reasoning for that, at least Rob Smith, like the creator, I could be wrong. I haven't watched this course in a long time, but generally we're targeting like we're targeting the main markets, which is the New York session. So if you have extended hours, it does a few things that messes you up. It gives you incorrect candles and incorrect time flips. And I'll go to the time flips in a bit. Incorrect candles in the sense of, let's say here we have a 3-2 setup, but sometimes if you have extended hours, you might have like a 2-1 setup, or this 2 candle might show up as an inside bar because the times aren't evenly matched because you're using pre-market and after hours. And the 4 hour time flips or the 1 hour time flips are different. So for example, if you're using pre-market and extended hours on, the hour flips every hour. When you're trading New York session, the hour, excuse me, the hour flips it flips every hour, like every in 30-minute increments. So 9:30, 10:30, 11:30, so on and so forth. But if you're using extended hours, that's gonna flip on the hour. So 9, 10, 11, 12, etc. And that's gonna give you incorrect reading when you're using the strat. So we always need to use regular trading hours. And you won't be able to see the gaps when you are looking at it. But anyway, Again, with the Strat, it's pretty much price action simplified, created by Rob Smith. Essentially, there are three different scenarios, as we can see here, and I'll just zoom in. Scenario one is an inside bar. It pretty much just stands for consolidation. A two bar is a directional bar. It's essentially lets us know where price is heading to, whether it's reversing, continuing, etc. It only breaks one side of the previous bar. And then the third scenario is a three bar, which could be, some people might know that as an engulfing bar, mother bar, so on and so forth. But here, for example, a three bar breaks the low and the high of the previous candles. And then with the different scenarios, you can get different setups, which you can take. For example, actually, before I go into that, the other candles, the main ones, are actionable signals. Actionable signals are hammers, are hammer candles, even though this is more of a dragonfly, but close enough. So hammer candles, hammer candles, or shooters, as Rob calls it. They're pretty much actionable signals, which can give us a reversal indication. For example, we came up, printed a shooter, a reverse hammer, and then a reverse down, printed a hammer, came back up. Of course, sometimes you'll still print, I wouldn't really consider this a hammer, but it'll still print an actionable signal and still reverse. Perfectly normal. Again, probability. 2-1 setups, I would consider actionable. 3-1, 3-1 setups back to back are actionable signals. A little more on the advanced side, but that's a good setup to take. So yeah, essentially, once you get the understanding of the different scenarios, we can combine them and look for specific setups. For example, what is this? Let me go a little further back. 90 days, let's do 180. Where was the hammer at? There we go. So let's say, for example, one of my best setups is called the Momo hammer. Essentially, a Momo hammer stands for momentum hammer. If we're currently bullish, it's a hammer that prints in the direction of the trade. So for example, we see here, this hammer here, but let's go back a little bit to get an idea. Clearly on a downtrend, and then price finally reverses. Instead of continuing down, it reversed to the top side. So we have this 2-2 reversal to the upside. And here we have a hammer close on a bullish reversal. So with a Momo hammer, it's essentially an indication that the trend is going to continue strongly upward or downward, depending if it's a shooter on a downtrend. So with the Momo hammer setup, pretty straightforward. As I've mentioned before, you're going long as soon as it breaks that candle high. Your stop loss is under the candle, which, as you can see here, just straight body. There's no wick. Would have filled you and just went straight up. Your targets, of course, look to the left. Look at the previous highs. So this candle here would have been our first target, which this candle here hit that same day. If you did want to swing trade, which I would never swing trade indices, personal preference, second target, looking at the candles, hit the next day if you swang it. And then literally just market just kept on rocketing up. This was like during October, to December, that huge run that happened then. But Momo hammers, love them. If you see them, take them. I usually take them or look for them anyway on the 1 hour and the 4 hour chart. Sometimes if I'm on the 15, I have the 15-minute up, I'll take them there too. But usually, the higher the time frame, the stronger the move is going to be. But you can take them on the lower ones if you choose to. Rob, something that I forgot to mention is if you are relatively new to the strat, or Vincent or anybody who's watching this, Rob Smith recommends that you start with the 1 hour time frame if you're going to be day trading. So the 1 hour or the 4 hour time frames, or even the daily time frame to take trades off of, just so you can get a clearer picture. Because if you're on the 5 minute, it's going to be a mess. All these like different setups and candles everywhere. And personally, I don't trade the 5 minute unless I'm looking for a TTO or either bearish or bullish, which I'll explain a little bit today, since that's a little more like the advanced setups. But 5 or 15 minute, I only get on those for look for TTO entries. That's it. I don't really take trades off of those time frames. It's very, very, very rare that I do.
Are most of your trades like daily trades, or you go for like weekly trades, maybe something that you'll sit on for like a week or two, or you're just trying to buy and get rid of either right away or the next day?
So I day trade a lot more than I swing trade. Um, if I were to swing trade, so if I am swing trading, I'll use the daily, the weekly, and the monthly. Of course, you can use the quarterly, but I'm not really going to buy a contract 2 years out. You can, but I'm usually looking for the daily, the weekly, or the quarterly, or sorry, the monthly, to look for setups. For example, this is a setup that was shouted out by one of my mentors. Shout out 100K if you see this. So Veil, this is the monthly chart. If this candle here, this inside bar, triggers to the upside, I'm gonna buy probably like half a year out or even a year out contracts. So once it breaks 1380 to the upside, I'm buying calls um, for the eventual target of being hit at 1587. If it does break this low, you can take it short if you want to. But again, um, sometimes I don't like when there's like buying in this specific level when it's going to trigger short. But again, it's a trade regardless if it triggers up or down. But for me, for this specific trade, I'm looking for it to break to the upside. And once it does, I'm gonna get some contracts 6 months to a year out, set my alerts, and let it cook. And that's it. Some contracts that I do like swinging. Actually, I haven't swung Coca-Cola in a while. Coca-Cola, the contracts are super cheap. You can get like a month or two out for like $100, like in the money. And the deltas are super high. And the theta's like $2, a dollar, if that. Let's see. Let's look at the daily. We have that 3-1-3-1 setup that I mentioned. So if it does break to the upside, I will probably get some contracts at least if it's off a daily or 4 hour trigger. I'll get at least 2 weeks out or even 30 days out just to give myself enough time, whatever works best. Again, you can look at its ATR to determine its range. So let's say if I'm getting in at 59.68 to the upside, and let's say my target is 60.50, I can determine that in at least 2 days, based on its ATR, it'll probably hit that target up here to give me an idea of how much time I need. But granted, if I'm going to swing, minimum 2 weeks off a daily or a 4 hour time frame. If it's a weekly trigger, then I'm going to be getting at least 30 to 60 days. Really 30 to 45 days I prefer, but I always have the idea in my head, all right, there's going to be a weekly trade, then that's going to take at least a week to play out. A recent one that I technically swang, but didn't really, because it literally hit the target in the first day, but was Intel. Let's see. Yep, so it was this 2-1 setup on the weekly. As soon as it broke this level, I think that same day, I'm not sure if it was news or just crazy momentum, literally hit my target. I think that same day or the next day. So I was pretty much done. I got out of the trade. Sometimes that'll happen where it'll be like a weekly trigger and it just rockets in the direction you want. That was a quick like 100% or so, if I recall correctly. But yeah, you can get pretty good moves. If you see a 2-1, those are my go-to setups and 3-1 setups, so keep an eye out for them. Those are really, really good. Also, for the people who just came in, Ron, welcome. And somebody else just came in. Anor or Anner, I'm not sure how to pronounce your name, but hopefully I'm not butchering it. Welcome. Right now we're going over the strat. And if you guys are lost, after I go over one last little tidbit, I'll get into some
I
other.
got another question. How
Yep.
do you usually find the stocks you are kind of looking for? Are you kind of shuffling through everything, or you have some that you constantly trade similar ones because you notice that they hit what you're comfortable with?
So for me, I usually like day trade similar stocks. If I'm swing trading, I'll probably swing trade ones that I'm familiar with because I don't really like swinging stocks that I don't really know. And if it is something new, I'll probably like paper trade it just to get an idea of how the contracts move. And then once I'm comfortable with it, I'll go into my live account and use it to swing trade when the next setup uh shows up. But great question. If you think or swim, you can set up a scan. So right now, the specific scan, the 3-1 scan, is showing a 3-1 setup on the daily time frame. So you can easily use this to find setups on whatever time frame you want. For example, like the one that I just mentioned right now, that was the 3-1 setup. Let's just say I want to look for a one or like a 2-1 or a 3-1 on the weekly. I put that scanner there. I scan. Cool. These are all the stocks that are showing um, an inside bar on the weekly time frame. So let's say, for example, we have Zoom. Zoom has an inside bar on the week. So let's go back here. Let's go to the weekly. And there's our inside bar on Zoom. So now I know, cool, there's a 2-1 setup on this time frame. Let me set my alerts. Let me check the contracts. I'll choose it, keep it moving. And if you don't have these, um, what platform do you use?
I use Robinhood currently, but I'm talking to the trying to switch everything to another platform, and everyone keeps telling me to use Thinkorswim.
Thinkorswim, in my opinion, the greatest thing of all time. It literally has everything that you need, scanner, charts, literally everything.
I used to use TD back in the day, and then kind of Robinhood made everything easier, but that wasn't necessarily better.
Yeah, Robinhood, the UI is definitely prettier and like maybe more user friendly. But once you get used to Thinkorswim, it's super easy to navigate. Um, but yeah, I love it. Highly recommend. Let's see. But yeah, this is pretty much how I found my setups. Um, Once you select the scan that you want, just search it and then look for the setup and see if you like it. I'm gonna take a quick pause on the strat talk before just because more people came in. Ron or anybody else, any questions that you guys have?
No, not yet. What did you cover so far, like topic wise?
So in the beginning, we were going over like, what to do if you're like second guessing your trades, or you become afraid of taking trades, like the mentality that you need to have in order to thanks, Vincent, for coming over. I will see you later. Yeah, so we went over like, what to do if you're second guessing your trades, if you become afraid of taking trades, the mentality you need to have, having proper risk management, stuff like that. We touched base on like, where to start if you want to get into options or strategy. And then I kind of just went like on a tangent, on a tangent with the strat, going over it. So right now we're like talking about the strat and, you know, looking for setups and stuff like that.
Okay, right on time.
Yes, sir. Cool. Anybody else have any questions before I continue my strat tangent? Feel free to type in the chat, come off mute, whatever you prefer. All right, more strat talk. So, essentially, once you find your setup or whatever it may be, so on and so forth, set your alerts. The next part of the strat that I want to go over is broadening formations. This is the part that everybody hates because they hate drawing them, but they must be done. Let's go to SPY. So for broadening formations are just support and resistance for strat users. It pretty much gives us an idea of where price wants to go, where it can potentially bounce from or reject from. So with broadening formations, you know, once we have them drawn, we can look at the chart and determine, all right, let's say if we have a 2-1 setup on the top of a broadening formation, or the top range of a broadening formation, we can potentially see that price might reverse if it does trigger to the downside. So it can be a good indication of what may happen. If you see actionable signals like hammers or shooters at broadening formations, those are really, really good indications of potential setups. Let me actually show you one. I think it might have been on TradingView when I was drawing some more on Bitcoin earlier. Also, something I forgot to mention in the beginning, the strat pretty much works for everything since it's based on price action. So, you know, options, regular stock, crypto, you can use a strat for that. It all works. What I would say is that, oh, wow, I definitely missed that setup. So looking at Bitcoin now, right? To show a live example, I should have done this earlier. Bitcoin, oh, this was a short trigger right here, 68,246, give or take. So if you would have taken that short, you pretty much would have been up almost $1,000 right now, or, you know, depending what your leverage is. So it just hit 1,000. Your stop loss would have been right above this candle. First target could be this body right here, if you want, or the bottom of the wick, whichever one you prefer. Or you can take its ATR divided by 3 and use that as targets. But anyway, live example of the strat right now. So going back to what I was saying earlier, I think it was on the weekly. Yep. And also, when you're done drawing your broadening formations, your chart is going to look like this. It's going to look crazy with lines everywhere.
Jesus Christ.
But when you go on the lower time frames, it'll be pretty relaxed. As you can see here, pretty chill. If I'm on the 1 hour, we have one down here, one up here. And depending what you're charting it on, I always recommend categorizing them so you can hide them if you need to. So you can only see specific ones if you want, like monthly ones, the quarterly ones, so on and so forth. But anyway, let me go back to this example that I was going to mention. Let's go to the weekly and let's zoom in. So like I mentioned with the strat, getting actionable signals offer broadening formations. So this BF off this 3 candles, well, before I even go into that, 3 candles are broadening formations on lower time frames. So it only makes sense to draw them off the 3 candles. You can draw them off of the 2 candles. I just prefer the 3 candles for the reason that I just mentioned. But anyway, This candle printed in the first week of January, so I connected my lower BF here, and then my upper BF there. And remember, none of this here existed, right? Can I do replay? Cool, I can. So let's pretend nothing exists. I drew my BF for the weekly. Let's go, I think this is one candle ahead. Yep, all right, one candle ahead. So we have a rejection of these two broadening formations, which can potentially tell us, looks like price, if it does reverse, it wants to come back and retest these BFs down here. Let's keep going. All right, boom, we triggered. Stop loss is up here. Take profit is the bottom of this wick. And then, of course, these candles down here. Let's see what happens. Hit first target, and I guess almost third target. So hit two targets. Let's keep it going. All right, next candle on that next week, hit the next target there. And remember, your stop loss is up here for the short. So you're still good in this trade. It hit, it went what? 41,466. That's about what? 1,600 in your favor. So it hit the targets and hit the broadening formation. Let's see what happens next. All right, boom. We have a hammer printing off a broadening formation, or in this case, two of them. Off two weekly broadening formations. So we have an actionable signal printing off of this. That's a really high probability trade when you get an actionable signal off a broadening formation. So pretty straightforward. We're going to take the long as soon as it breaks this high. Target 1, top of this wick up here, or the previous candle. Target 2 can be this broadening formation. Target 3 can be this broadening formation. Target 4, etc. And then the next previous candle high up here. So you have all these targets to the upside. Let's keep going. All right, first week, target 1 hit. Let's keep going. All right, next week, 2 up. Price continued higher. Hit the BF target. Hit the other BF targets, same week. Let's keep it going. Price closed above this BF, as if you know about support and resistance. Huge candle, super strong, closing above a resistance level. That's probably going to be support, as we can see here. Closed above. This candle came, touched perfectly on this BF that who knows how far back I drew it, and hit that candle target. So you could have been long at 42.8K and it went to 49K. That's 7K that you could have gotten. And your stop loss is still down here. You would have been straight this whole way up. And of course, as we can see with Bitcoin now, it literally just nonstop kept on going. So you could have been swinging since January, 2 months ago. And nothing told you to get out because price never reversed. Just continuation after continuation after continuation. Before I continue, any questions?
Yeah. If you draw a broadening formation on a particular time frame, what do you look for breakages on the same time frame for that BF, or how do they yeah, which time frame do you use to break what BFs?
I don't really look for a specific time frame, so for it to like break a BF. When you draw your broadening formations, I draw them from the yearly all the way down to the daily, depending what I'm trading. If I'm day trading a stock, it's going to be from the yearly all the way down to the daily. The yearly, quarterly, and monthly, I draw them from the beginning the stock was born. The weekly, I'll probably go like 2 weeks, 2 years out, maybe 3 years. The daily, I'll probably go like a month or two out because, you know, I don't want spider webs everywhere because the daily might print a lot of 3 bars. But I usually go 2 months back um, when I'm drawing them on the daily, the weekly, 2, 3 years back, the yearly to the monthly from the beginning of time when the stock was created. Um, so in the sense of how you can use them, the higher broader information that it's bouncing or rejecting off, it can be a stronger move. So if I'm day trading for Bitcoin, I only go down to the weekly. I don't bother with the daily because I mainly swing trade Bitcoin. I don't day trade it. So I only went down to the weekly. But anyway, let's say I'm on the 4 hour for whatever reason. You can look for potential setups in the sense of let me see if I can find a clearer example so it makes a little sense. So let's say with Bitcoin, what BF is this? A weekly? That's a weekly. You can use literally whatever time frame you want to look for setups off the broadening formations. The lower time frames will give you an earlier entry, but generally, you want to use the higher ones for better probability setups. Just for an example, let's say I think last week it got flushed down, and let me delete these fibs real quick, or actually I'll hide them. So we get that big sell-off that happened. Then we get a rejection right here. You could have taken that 212 down. Granted, it was short-lived since they brought it right back up, but you could have gotten a few dollars out of that. That went what? From 63, 400. It's about $600. Not bad. But anyway, yeah, with the BFs, you just use them for potential bounce or reversal areas when you're taking day trades, swing trades, whatever it may be. Hopefully that answered your question.
Yeah, so it doesn't work like support and resistances that you draw from certain time frames. Like you wouldn't draw a daily support and resistance and look for a break on a 1 minute on that because the possibility of a fake out is high. So that's why I asked, like, does it work the same way with BS?
Ah, gotcha. Yeah, like in that case, you can use it if you want to with the 1 minute. Personally, I don't really find the strat effective for lower time frames in my experience. Like I'll probably like if I'm day trading, maybe I'll take a rejection or a reversal if there's an actionable signal like on the 15 minute. But generally, I don't really bother with anything like under the 5 or 15 if I'm trading the strat. Anything under that is just too much noise. It's not really efficient, in my
Right.
opinion. Um, for the 1 minute or 3 minute stuff like that, whatever lower time frames, that's more efficient if you're trading like ICT for futures. I guess you could use it for options too, but again, it really depends on what exactly you may be looking at or trying to do. But yeah, lower time frames. If you're starting off with the strat, I wouldn't really do it. I will stick to the 1 hour, 4 hour, and daily time frame if you're day trading. If you're swing trading, daily, weekly, monthly, stuff like that. Any questions before I continue? If you have any questions and you don't want to talk, feel free to put it in the chat. Either one. All right, so the next portion of the strat is time continuity. Time continuity is basically just looking at what the time frames are doing, right? So, if the quarterly, monthly, weekly are green and the daily is green, you don't want to be taking a short on the 1 hour or the 4 hour. You run the risk of it being a low probability trade because you're going against time continuity. The more time frames are in your favor, the higher the potential probability for the trade. So let's say in this case, Bitcoin, clearly we're super bullish, near all-time highs. You can take shorts if you want to. It might not be a really high probability trade. And we're kind of like in between broadening formation levels. So it may reverse and touch back down here, or do a little retracement, then head back up. Again, we have to see what happens. But if you were to short Bitcoin, it'll be a little risky because we're still super, super bullish on it. But anyway, with time continuity, you mainly want to be looking for the time frames to be in your favor. Once you get used to it, you can kind of get an idea of when you can go against time continuity for like a good trade. But generally, I like to take the reversals off of broadening formations if I'm going to be going against continuity. And if I do go against it, but it's a decent trade that I've taken before, I'll go with a small position since I have some things against me. Do I use VWAP as a guide when I'm trading? I do not use VWAP. How you see my chart, that's how I trade. Broader informations, candle numbers, time continuity, ATR, that's it. When I'm trading futures, I use fibs, but that's a different way that I trade. I don't use a strat for futures. It's not as efficient. But yeah, that's pretty much how I trade. Just keep it super simple. You don't want to overcomplicate things too much. That's not to say that VWAP isn't good. I know people who are great traders and they use it. Just personal preference for me, I don't really care for it. But this is pretty much how I trade. Any questions? Any confusion? All right. I guess there are no more questions. Rob, did so far the stuff that I went over make sense?
Yeah. Are you talking to Rob, right?
I guess
Yeah, I'm here. My bad.
no, it's all good. I guess to you too, Ron, if I guess Ron, you missed the beginning when I started going over the candles and stuff like that. But yeah, I guess to the both of you or anybody else here, if it's making sense, it's confusing, anything like that.
No, it's definitely making sense. I just have to have this set up myself, like sit with the charts, kind of start drawing the things out and seeing what I feel comfortable trading, right? Like I see that you have your whole thing there and it's easy for you to read those charts because you've been doing it for so long. So I think a lot of it is being familiar with those candles first and foremost.
Yeah, definitely the more screen time you add, the easier it's gonna be. Because when I first like got introduced to the strat, I'm like, bro, what am I looking at? Why are there laser beams everywhere on the chart? Like, what's going on? But once you get familiar with it, super, super easy. Like, you'll be able to look at it like the back of your hand. Daniel, if you're still here, look Bitcoin on the monthly chart back in December of 2022, take that 312 reversal since 18K, straight rocket up. Little retracement, but kept going up.
Still here. I'm gonna watch that video on the strat because this strategy makes a lot of sense to me, bro.
Bro, the biggest game changer, simplified everything for me. Been working great for the last 2 years, and to this day, really. But yeah, as we wrap up, well, I guess before we wrap up, one thing that I'll just share that I've come across this week in the sense of like individuals having issues in their trading. If you're in a state where you like need trading to work for you, or like, it's like do or die, I highly recommend getting your personal affairs in order, because if you're trading out of desperation, trading out of necessity, in the sense where it's like affecting your judgment and your rules and your system and all that stuff, you're literally setting yourself up for failure. I'll tell you that by experience. So definitely take your time with it. If you need to take a break from trading and get your life in order, definitely do so, because I have heard horror stories, people losing life savings. I'm sure you guys have heard it too. Just trying to like make that big win or get it all back and X, Y, and Z. And if anybody has experienced that or is on that and is watching this, I'm gonna tell you right now, you will never, ever get that money back. That money is lost and you are not getting it back. On the bright side, you will get new money, which will be more than what you lost. But you need to put in the proper time, you need to put in the proper disciplines and follow your system. The market doesn't care about you. The market doesn't care about your hopes and dreams. The market is just the market. Our only job is to take money from it, and that's it. Anything else is extra. And
Well said.
with that being said, um,
Desi, I'm gonna have to take a step out of here, but thank you for everything, and I'll send you some messages with any questions I have as the market opens up tomorrow.
sounds good, Rob. Yeah, just post in the chat and I'll get back to
Yep.
you. Thanks for coming.
Thank you.
See ya. So as we wrap up, I always like to do this with my personal clients and any thing that I host. What was everybody's biggest takeaway? You can put in the chat, come off mute, doesn't matter.
Well, thank you. I'm definitely gonna get back to looking at the strat now that I'm more technically sound. It's been a while, so explain everything. It's like much easier for me to understand now. So I'm gonna check it out later today.
Definitely. Yeah, for those who are maybe new to trading, the strat to me, I wish I knew this when I first started. It's like literally simplifies everything. So it's a good place to start.
I think for me, my biggest takeaway, since I haven't been trading in a while and just been holding on to shares, hearing someone else just as fearful or just as hesitant to jump in a trade, even though you're confident about its outcome, is kind of not reassuring, but it's like, oh, okay, so I'm not the only one, you know?
Definitely. And again, it happens to me too. Like, I'm human. Sometimes I'll be afraid to get in the trade, but you just got to talk yourself through it. Be like, hey, look, this is your setup. It got to be taken. It's not up to you if it wins or loses. If the analysis is there, just take it. Sometimes what I'll do, like literally when I'm trading, I'll like press the button, set my take profit and stop loss in the system, and then I'll just walk away from the computer and then let it do its thing, because I can't do anything else. Me looking at it is not going to do nothing. Um, so once I get in the trade, I either close the computer, switch to another tab, do something else until I get that notification that the trade is closed, win or lose, and just wait for the next setup.
But that leads to another question. You have a stop loss set and a take profit set on the option.
Specifically, if I'm trading futures, so with futures, what I love about it is that as soon as I get in the trade, I can have my stop loss and take profit pre-programmed. So literally the trade automates itself. I don't have to do anything. For
Yeah, that's right.
options, depending if I want to take it all off at the first target or not, depending if I want to pay too much attention to it, I'll either set like just alerts and then I'll manually manage the trade, or if when I get into the trade, let's use SPY as an example.
Yeah, I asked because I know with options you can't take profit by price. You only can do it by not by price of the stock, only by the cost of the option. That's why I asked. I forgot on futures you can set and forget it on futures.
I think on Thinkorswim, there's a way that you can have the option take profit at a specific price point of the stock.
Oh, that's amazing.
I'm gonna be straightforward. I've never learned how to do it. I just me being lazy, like kind of stuck in my ways in the way that I do it. But what I usually do, probably making it harder for myself. Let's go here.
If you find it, I'll definitely switch the platform because I've been looking for something like that.
What I like to do is, let's say, and I'll keep math a little simple here. Let's do below, and let's just make it 511 just to be easy. And then let's do 510. Oh, whoops, that's not what I want. Let's do 510 as the first target. Oh, that's annoying. Let's cancel 510. Let's do 509. All right, so now let's go to the option contract. Let's go to SPY. All right, let's just say we're looking for puts on the right side. Let's just say we're going to do the 510 put. In our target, it's 509. As we know, a full dollar in our favor is a delta, which is 0.29. Of course, as price gets closer to our strike, that's going to increase. But for the sake of easy math, let's just say that the delta is 0.30. The ask 62, bid 61. So with our take profit being $2 away, what I like to do if I don't want to babysit the trade at all, I will set a OCO order, or order cancels order, where you can put your stop loss and your take profit at the same time. So in my head, if the delta is 30 and I get in at, let's say, 60, and my target is 509, that's two deltas, or 0.30 or 0.60 of premium added up per 0.30 per dollar, right? So I can imagine if I'm adding 0.60 to my entry price, which will be 1.20. So I'll set my take profit at 1.20 on the contract. And let's say if my stop loss is $1 away, then I'll put my stop loss at 0.30. I don't need to do anything else with the trade. Based on the price and the deltas and the Greeks, I have my take profit and my stop loss. Of course, I'll still set my alert because maybe it'll hit my alert, but it might not hit the profit target. So I'll just take it off manually there. But usually it'll hit the profit target by itself. So that's what I like to do. That way I don't need to like figure out, all right, when should I sell this or that, or what is the price gonna be? You can get an idea of, how I just mentioned to you. And let me know if that makes sense.
Oh yeah, for sure.
So with the order cancels order, I like doing that personally. Definitely do some research. If you do find how to do it, I'll do some research myself, how to like get out at the specific price. I'll let you know if you find it first than me. Definitely let me know, because that'll be nice.
Yeah, I think there's some type of regulation sometimes with these platforms when you do market orders, because that means you have to tell the system to do it a market order at a certain price. And like I work with Webull, and sometimes Webull will give warnings that they can't do market orders when it comes to selling or something like that. So
Interesting.
it's like he's got this babysit it the whole time. It's killing me.
Well, you can just set your alerts based on the chart where your target will be. I know on Webull you can also set OCO orders. I used to do it when I was there. You can do like take profit and stop loss at the same time. But yeah, I will end it with that because I'll be here for another 3 hours if you guys let me. Anywho, as always, thank you guys for coming through. The replay of this video is going to be on YouTube for if you guys did miss the beginning of it. It'll probably be uploaded. Well, in the morning, you'll see it there. It'll just process probably like the next hour or two. But yeah, again, appreciate you coming out. As a reminder, in the beginning, for those who may have missed it, if you do sign up for the class and you have questions, I require you to be present for me to answer the questions. Again, I would prefer to talk to an actual person and not just answering the question on my document here. And also, it'll let me better serve you in the sense of giving you a better fleshed out answer because I can ask you questions. I'll give you an example. Somebody asked how to get consistent gains. What does that even mean? What's happening? Where are you at with your trading? What gains are you getting now? Stuff like that. That's a very vague question, which I can answer in a million different ways. So if you are going to ask a question and sign up, of course, there's the replay, but I require you guys to be here present so I can actually go deep into the question that you ask. Anyway, before going to another tangent, again, thank you all for coming through. Enjoy the rest of your Sunday, and I will see you guys in the morning. Later.
Yeah.
Appreciate you. Thanks.
Absolutely. Bitcoin to 100K.
Yo,
Yep.
what's good, Dusty?
How much?
I was waiting for you to finish up. Yeah.